Hello everybody, it's AndreJMcClendon coming at you a new video. This video is going to be about what's been happening with our economy and during these harsh times, especially with this COVID-19 pricking the bubble. So I'm going to go through some things. Please write it down. If you got any questions or comments, please drop them below. And subscribe to the channel. It's about trading, finance, business. And let's hit it. So we're looking at the federal funds rate. This is the 62-year chart. We're going to zoom in to the last like 20 years. Now guys, the last 20 years has been really important because we've been at 0% for a very long time, and the Fed has been doing quantitative easing during these last two crashes. And I believe that we already started our last crash, or our crash that we're currently in right now, but we gotta wait for two quarters of economic data just to get that out. So guys, right now this is bad because we're doing massive printing, and massive printing is going to be killing the purchasing power of the dollar. So look at the Fed's balance sheet, look at all the years, and it's been exploding in recent months. Now, a lot of people are going to blame it on the COVID-19. Remember, guys, the markets were doing bad before it happened. This is just something that pricked the bubble. We were already going to hit this eventually. It just this happened now. So look at the last 6 months, and remember, we were at $4.5 trillion, their balance sheet at 2015, and now it's insane amount right now. We're almost at $7 trillion as of today. So we might be hitting, their balance sheet might be hitting 10 trillion by the end of the year. But we'll look at the purchasing power in the last, we'll say, since this chart's been out there since 1913. So remember, the Federal Reserve was implemented in 1913, and since then, our purchasing power of the dollar has been decreasing. Now, we've been decreasing basically every year, except for this point right here. Remember, we had we had a recession. The Great Recession. We also had World War II. But since here in the 1973, we got removed completely from gold, and then it's just been going down. So all this is showing that our purchasing power has been decreasing. So the Fed's balance sheet has been going up. Our purchasing power has been going down. Now this is put in perspective. We're going to be looking at some gold and silver. Now, why gold and silver? Remember, gold and silver does an accounting of all the massive printing that's been happening. Now, looking at prices today, I know prices are going down. You can have deflation happen while massive inflation, because remember, most of our inflation is going overseas. So we can have deflation happen right now, but with the Fed printing, it is increasing the currency base. All right, so let's keep going on. So this is just comparing that. In the last crash, we had 2008 crash. Look at the Fed's balance sheet, and it's been exploding. I went over that in a previous slide, but look at gold. Gold's going to start catching up and do accounting for all the printing that's been happening. Similar to right here. It does take some time. It's not going to be like it's going to be instantaneous, but this is what's happening so far. So I have showed this guys in other videos, but this is gold silver ratio, and it's been out of whack since we're in this economic period right now, and we were at a height of almost 115. So think about this: you had 115 silver coins just to get one gold. So this to me shows a huge sign that silver is undervalued, and gold's undervalued comparing to everything else. But this may be the best move to get into precious metals. Gold, yes; silver, more. And it was like a jobless claims. So a lot of people have not been looking at this, but jobless claims has been going through massive amounts. We're looking at almost 23 million claims. 23 million claims. And our unemployment rate is almost at 15%. So this is outrageous, and especially with the dollar, purchasing less. We're also going through this COVID-19. So guys, there's got to be a way to beat inflation, because if the Fed is going to print us into a hole even more, you need something that can beat it. Precious metals is one way out of it. Cryptocurrency that's another conversation, but gold and silver is something that I believe in. So our next thing, guys, go to my website, AndreJMcClendon.com, click on gold and silver. We're going to be going over two other things when it comes to our debt. So we're on the U.S. debt clock, and literally our debt is going over $100,000 every like 2 seconds. Like, you start thinking about it, every 2 seconds we're going $100,000 into debt. So this is unpayable. We're never going to get out of this hole, because the way that our financial system is built today is debt based. So we're continuously digging ourselves into a hole. Now we gotta pay this stuff back. And to me, I think the taxes will just be increasing overall, decreasing our purchasing power. We can buy less with our current dollars now. And here's a world debt clock, and you can see the debt, and especially with these top three, U.S., China, and Japan, is just going. It's just getting crazy. So, in my opinion, I think that precious metals and cryptocurrency, some cryptocurrencies, are a way to beat inflation, way to beat the banks, and a way to have a win in this current economic problems. Because the stock markets, real estate markets, that stuff's all overvalued. I mean, you're getting into it. I would do it for short-term capital gains, but do anything long-term, I would. For me, I wouldn't even trust it, because the way the way the Fed's balance sheets have been increasing is just pumping more money into the markets, fake money. So guys, here's my website. If you guys want to find out more about trading, investing, or learn more about economics or just business in general, go to my website, start a conversation with me there, or you can hit me up with a comment below, and we talk about business and money, investing and stuff. But that's the video, guys. Like, share, subscribe, drop a comment below, and I'll see you guys in the next video. Thank you for your time.